everybody, hope we're doing well. Welcome back to another Sunday Sessions video. This time around I'm going to be starting off with the Euro to US dollar market. This is the main one I focus on. In my eyes, probably the most liquid and most volatile out of all pairs that we can trade. So for my strategy, it seems to just work best with this market. So starting off higher time frames, of course, getting that overall bias, seeing what the higher time frame overall outlook on the market is, and then using that outlook as we go down to create that story and understand exactly how we want to tackle the market. So of course, in this move lower, we've had an impulsive wave, retracement, impulsive wave, retracement, impulsive wave. We've displaced the most recent protected high, given the fact that we're going to continue this bullishness. Displacement means reversing the trend. So if we look inside of this and we were to say, okay, on an even higher time frame, we could argue that we have impulse correction, and then from this point down to here is a singular impulsive wave down. So looking inside of that, I've identified 3 supply zones, going through a range of time frames to refine them and validate them. These are the 3 areas that I've managed to find. As you'll see, my alerts right now are a bit all over the place, but if you give me a moment, they are actually meant to be sorted out to have an alert at each zone so that I am notified at any point if price does trade us in. So going lower, obviously now we've got that overall bias that we want price to continue trading up after the displacement into one of these zones before we find a reversal, and then hopefully the next leg lower, because we still haven't surpassed the higher time frame final target that we want it to surpass given this bearishness that it's now following. So it's still not reached its major downside target, in which case I believe it's still going to be bearish until it does achieve that. So there's that point. But without getting sidetracked, I'm now looking at this as our first impulsive wave of the correctional wave. So our first bullish impulse after the displacement. So seeing this as an entire move up, I'm now looking inside of this entire move up to try and find, once again, any unmitigated positions. Now all of the ones you see, or these 2 at least, below price are definitely unmitigated, refined, validated. So potentially, dependent on how much supply enters the market, we may end up tapping into one of these and finding buy opportunities in the market. Tough to tell, because there's 2 things that price could be doing at the moment and we need to be wary of it. It's building liquidity just below the first supply zone. Now if price does want to react to this zone, we're going to build this liquidity, have a tap into the zone, I didn't mean to move it, and then we'll have a move lower, which should potentially then allow us to achieve a new low in the market, which has come all the way down here. However, price may decide that it's going to distribute, reverse just below, it hasn't tapped, in which case it's more than likely wanting to tap some of the zones higher, and will therefore need to mitigate some of the zones lower before going higher. Therefore we have these zones drawn out. So once again, we can move our alerts down into these zones so that we are notified as soon as price taps us in. I did not mean to do that. Add alert. There we go. Now we'll go more fractally again. And we did have a slightly strange market here, because obviously this move does come to break some of the lows, but straight afterwards we have that break structure to the upside. So we reconfirm the fact that we are making higher highs and higher lows. Looking in the market more fractally, or just in this recent move, I saw these zones here as zones that needed to be mitigated. We see that after the break of structure and creating that new swing high, we traded back down into this zone. I wanted a retest or a re-mitigation of that zone, which price seems to wick us down into it, reverses higher. So we just have to watch out in this coming week, because it seems like we are slightly undecided in terms of the supply and demand balance. We don't fully know which side of the market is in control. Obviously, as of right now, we are still bullish, so demand zones are still in control in terms of like the 5-minute, 10-minute, 15-minute that I'm looking at. So my bias is going to be to continue that, but seeing the amount of rejection we're getting now, impulsive waves up are not as volatile and less and more shallow, and then retracements back down are much larger and much more higher volume. So that is an indication that the current trend is coming to an end. So just being cautious of that. Regardless, this was some positions I was looking at and sending through the VIP chat, looking for buys along this area. So if anybody did manage to get involved in any buy position on this market from that analysis, well done. But moving forward, hopefully you've picked up my bias. It depends what we do. We're either going to mitigate this point of interest or this supply zone and then run all of the lows, or we're going to decide we want to run one of the supply zones higher, in which case we're going to have a pullback into a demand zone and then make that move higher. So these are the zones I'm looking at. It seems as if within this impulsive wave up, we're losing steam, so potentially going to have a slightly wider scheme move back down now into one of these regions so that we can introduce more demand needed to then take price higher. So hope that makes sense. If it doesn't, make sure to leave it in the comments or drop me a message. But for now, we'll move on to the next market. So another one of my favorite markets to trade, US dollar yen. Again, we are bearish within this. We can see we started an impulse in this top left corner, retracement, impulse, retrace, impulse. We had some breaks of structure. As we look more fractally inside of this, we see that as we retrace back up, putting in that correctional wave, we come to perfectly tap and mitigate. I think it was a 1 minute zone or a 1 minute area point of interest. Also clearing a little bit of this liquidity in here, filling in all of this market inefficiency. After we have that reversal, we then have the big move down. We displace that low. So I was looking for price to potentially come back up, test us into a supply zone that would have been left over from that move. We see the price perfectly comes up, taps that zone, and then there were many entries we could have found within this region around the 26th of May in the later evening GMT time. And this is a trade that we were looking to take as a result of it. Now, as you see overall, the potential for this trade is massive. We did at peak start running 17 to 1. Of course, we'd already partialed once, so it doesn't actually come out of 17 RR, but nonetheless, still watching this market. There is an unmitigated position right at the top here, right near our entry. And it does appear that price is hesitant to keep making these moves lower. It's building a lot of liquidity in this region. So my bias is that price will potentially now make a sharp move higher, mitigate this zone where we can find potentially another sell entry before it then comes down, because it's also built a lot of downside liquidity in this region. So we've got liquidity at both sides. In my eyes, for the bias to work, it makes more sense for us to clear the upside liquidity, mitigate the supply zone, then start making moves lower, running all of the downside liquidity, then continuing this overall bearish trend where this should be a final target to set a new low in the market. So that is my current bias on this market. Keep your eyes out for sells within this region. We are currently within a nice trading range here. Of course, it does appear like there is quite a lot of supply present in the market, because we're seeing that pretty much what's happening here is that we have a move lower, almost like it isn't a redistribution, but almost like a redistribution, because the retracements are quite shallow and very wicky. And then when we come to put in those impulsive waves, very high volume, this to me does pretty much seem like a redistribution. So there's evidently a lot of supply in the market. There's no reason for it to have been exhausted just yet, because we see this move down, high volume to the downside, a lot of supply dominant. Again, high volume move to the downside, volatile, lots of supply present. So the only reason I can think why we're not doing that again is just because we have an upside target. We're just going to build liquidity, consolidate range, and then we'll clear liquidity, mitigate positions, and make that move lower. So from a supply and demand analysis standpoint, let's say, this market should hopefully go down, hopefully finding sell positions from this region. And then just a recap on the euros to US dollar, hoping to find buys on that market to catch that overall correctional wave. So again, if you have any questions about my bias on this or the analysis that I have done, either leave it in the comments or feel free to message me personally. However, that is going to conclude my section for this Sunday sessions video. These are the two markets I trade. None of the other markets are really showing me any tradable signs at the moment. Nothing short term. They're not very liquid. They're not very volatile. So these are the two markets I imagine I'll be sticking to come next week. With that being said, I'm going to pass you over to Luke, who's going to pick a few of his own markets, run you through his analysis, and give you his bias for this coming week.
How are we getting on, guys? I hope you're okay. I hope you've enjoyed the analysis that James has provided for you this weekend. This week coming looks very good. I'm very optimistic about the trading opportunities, and I'm looking forward to being involved in this market. The pairs that I've got to show you guys today are the Euro USD, the AUD USD, the Great British Pound to the Japanese Yen, and the Great British Pound to the US Dollar. So the first pair we're looking at today is the Euro US Dollar. As we can see, the price of the market was predominantly bullish. This was our bullish impulse. We then had a break of structure that took place here. This confirms, well, or suggests that price is then going to reverse and take a bearish turn, which it has done. As we can see, we had a break of structure here, so price came lower than a structural low that was set. We then had a lower high created and then continued bearishness, so that's fine, that's good. What we basically need to do now in order to get involved in this market is find areas that are key points that we could look to see price reversing. So I have highlighted a point of interest here. These are the last buys to a heavy sell-off. These were never mitigated. Price never came back up to actually tap into this last buy before sell. So therefore, I am wanting to see price actually trail back up, tap into this POI, and then go on to continue bearish. Now, I wanted to get involved because we are looking at the day time frame here. So I did want to get involved in a smaller buy position, a buy before the longer term sell. So I actually had highlighted, if we just zoom in slightly, I actually had highlighted 2 points of interest that were unmitigated, areas that needed to be tapped into. Well, I thought needed to be tapped into in order to push price up, but we are actually seeing continued bullishness. So I'm a bit hesitant and a bit wary on what's going to happen next. Obviously, we have a low set here. We have a new high created. So this is a structural low as such. This is obviously a structural high. This looks like this could be a new structural low going on to set a new structural high. If so, then we can probably expect that bullishness is going to continue. And it's just about waiting and finding potential entries. So we could have a look within this bullish move up for areas that have been left unmitigated. The only things I can see are these points of interest that I've got highlighted here. So the next move is for me just to wait. If we see price come down, that would be great. Breaking this low, people obviously, buyers in the market will then be either closing positions or get closed out. And then we can expect price to come lower. Price could probably tap into here, maybe here, and then I'd like to see price go on and continue bullishness. And this is where we'd be looking at to enter in on a medium to short term buy position. We can have a large take profit target, and then we'd obviously have a very refined entry from these points of interest. So I am overall biased to be a seller in this market, but I do believe that price is going to be buying dominant temporarily. As I say, we have a point of interest up here that I feel needs to be tapped into in order to push price lower, creating that new leg down. And then we also have a fib box as well. So this zone here where the two areas overlap, this is what we really need to be looking out for price to come into this region here and then show signs of a reversal. Obviously, we can then look to go short, longer term, and hold that position for a while. So moving on to the AUD USD, we spoke about this pair last week. Obviously, we've had continued bearishness. This was a new lower low that had been created, so that's great. What we are seeing now is a higher time frame retracement. That's what I'm led to believe. I have the swing high, the swing low marked. So we obviously want price to be trading within this region for it to stay bearish. So I have highlighted two areas. We've got our fib box, and then we've got a point of interest as well that I've found that has been left unmitigated. This is the last buy to a heavy sell-off, as we can see here. Now, price is approaching and has tapped into the fib box. So we have the 38.2, which is this line. We have the 50, and then with the 61.8 here. So I believe price could actually tap into one of these, then go bearish temporarily, setting a fractal leg down, and then I think we will see price continue bullish. So obviously we can see all this fractal structure. there's impulses, retracements, and I believe that this is obviously going to be an impulse. It's going to tap into one of these areas, let's say the 50. It's then going to come down, and then it's going to come up, come down, come up, hopefully tap into the POI. Obviously this is in line with the POI, and then go bearish. This is just one bullish retracement for the higher time frame structure. Obviously within that we have our fractal structure, we have our impulses and retracements there, but that's what I believe is going to happen. So tap into the fib box, we can look to go short temporarily. Brilliant, we can take advantage of that. Then we can close that position, wait for price to then tap into our POI, and then we've got another sell position that we can activate and get involved in there. Obviously that would be a longer term hold, and we would have a refined entry as well, as we have that area and that zone that price will hopefully reverse from. Now moving over to the Great British Pound to the Japanese Yen pair, we can see, however, POI highlighted here. This has definitely been left unmitigated. We have had a break of structure, so this confirms bearishness longer term. So I would like to see price trail up, show signs of displacement, a break of structure, a distribution, whatever it may be, and then go bearish. We can again take advantage of those sell positions and hold that longer term. Now zooming into this Great British Pound to the Japanese Yen market, we can look to be buyers before longer term sell positions would be placed. Again, all we need to do is look for pullbacks, some kind of retracement in order to get involved in this higher time frame bullish retracement. So again, we would just look for points of interest within this leg, wait for that pullback, wait for that confirmation of the next bullish impulse within this higher time frame bullish retracement, and then look to get involved. So this coming week, look for those buy positions on Great British Pound to Japanese Yen, and just have this area highlighted for that long-term sell position that we'd probably have in the coming weeks. Okay, so finally moving over to the Great British Pound to the US dollar market, we can see here how price is very much bearish. We have seen this throughout. So we obviously want to be sellers in this market. Just zooming out here, we can see how price was bullish. We had a bullish retracement. We then had signs of a distribution, breaks of structure, and then price has ever since been very much bearish. So we want to be sellers in this market. It's just about looking for those points of interest and those areas that we can look to get involved in. Now, obviously wanting to be sellers in this market, we need to find areas that price can trail back up to in order to take their next leg down. So obviously I've got this POI highlighted here. So that's great. I've got a less refined POI and then a more refined POI, which I'd like to see price tap into. Now, it looks as though price did actually tap into it here, but if we zoom in, we'll see that it actually didn't. Now, people may think, oh, well, it nearly tapped in, so it must be valid. Well, it's actually not. It's not valid unless it's tapped into, penetrated that point of interest. It's not valid. So we are still waiting for the penetration of this point of interest, and then we can look to go bearish longer term. Now, I was hesitant and I was thinking, well, maybe it's not going to tap into it just yet. Maybe we can expect, a shorter term bearish leg lower, and then trail back up, penetrate that higher time frame point of interest, and then we will see the next higher time frame impulse down. So I obviously have this area highlighted here as well. Price obviously hasn't tapped into it just yet, so we'll probably see some kind of pullback. Now, this could be from this candle here, maybe. Once price has come down, tapped into this, we'll see price come back up, tap into this POI, and then we should have the activation of a leg down, basically, a bearish trade that we can actually be a part of and get involved in. And then from that point, I would want to see price come back up, trail and penetrate this higher time frame point of interest, and then we can look to go short longer term and capitalize on what hopefully will be a huge impulse. So those are the four markets that I'm looking to capitalize on this week. I've given you my shorter term bias and my longer term bias. I've obviously told you guys that you can look to buy into certain pairs before a heavy sell-off. So yeah, you have my shorter term bias, longer term bias. Do with that as you please. Obviously, it'll be interesting to see how price plays out as of as of next week. Last week was kind of tricky in the markets. I mean, we saw a lot of range in price, a lot of consolidation, and I think it was just preparing for what will hopefully be a very volatile and trending market this week. So yeah, I mean, I was very hesitant with the trades I placed. I think we placed maybe 2 or 3 trades last week, but hopefully we can look to be a little bit more active this current week. Now, I hope you've enjoyed the video. I hope you've enjoyed the analysis that I provided. Likewise with James's. If you have enjoyed it, don't forget to leave a like. If you have any comments, any feedback, by all means, leave them in the comments below. As always, we are very active on our channel, so we will be in and around, and we'll be able to reply to any comments or feedback that you do have. So yeah, just to close things off, I wish you all a very profitable week. Be sure to trade safe, and if you're not involved in the Learning Lounge group chat, make sure you get involved. It's free of charge. Get yourself involved. We post all of our analysis in there, all of our updates, and yeah, wishing you all a brilliant week, and I'll see you guys in the next Sunday Sessions video.